And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. As always, the show where we bring you where the action is in the broader markets. And yes, we did have another active week, despite the broader markets ending mostly flat. So we are going to be covering quite a bunch as far as what's taking place beneath the surface of these markets. We're seeing some newer areas exhibit strength. AI ended the week on a weak note. Of course, we will take a look at Nvidia and a number of other areas. But first, let's take a look at some of the news that drove price action last week. We did have some economic data, and it was rather mixed as far as the results. We did see initial jobless claims drop earlier in the week, and that was good news. It was showing that the employment data or the numbers are resilient. So from there, we did get key inflation data today, and unfortunately it did come in a bit above estimates, and the markets were not pleased with that. We'll take a look at the impact all around there, but of note, going into next week's holiday shortened period, we will get key employment data for the month of August that will be closely watched. But also of note is the fact that today's inflation data did not change the outlook for a potential interest rate cut going into next month. It still remained elevated at 89%, which is constructive, but you certainly wouldn't know it looking at the markets. Also, we did get Q2 GDP, the first estimate there, and it came in surprisingly strong. So lots for investors to digest, certainly going into this long weekend. I imagine that a lot of people may not have been at their desk. So we did get a lot more by way of volatility. But let's go ahead and jump right in and take a look at these markets. And here we are, daily price chart of the S&P 500. And you can see that we did close the week back above that 10-day simple moving average. We still have a positive RSI and a positive MACD, indicating that the current uptrend in the S&P 500 does remain in place. Now, while we're here, I did point out last week the difference with that equal weighted versus the broader S&P, so I'd be remiss to not share with you this view. The equal weighted was down about 0.5% relative to a flat S&P, but very constructive here with what I can call a tight flag formation formulating. From here, oftentimes you will see another leg up. So as we move through, we can take a look beneath the surface of the S&P 500. I can tell you the NASDAQ is in an uptrend still as well. A little more precarious. It's just sitting at its 10-day simple moving average, all about tech weakness, but we will get into that right now. So these 2-month daily price chart views of the underlying 11 sectors are sorted by relative strength and then presented in descending order. We're looking at a 2-month view, and take a look. Energy at the forefront again. It was the top performer, up about 2.5%. We're going to take a look at some of those names. I'll also share with you, I can share with you why the group was up now. And one of the primary reasons is because there was an unexpected drop in U.S. oil inventory, and then also Ukraine, Russia. The conflict did heighten a bit last week, and that is another reason that we are seeing oil increase, the price of oil. We'll take a look at that, and then hence some of these energies. The most pronounced move was in those E&P exploration and production companies, and they tend to move in conjunction with the price of oil. So we'll take a look at, again, some of those names in the energy space that are picking up. And then XLF, we did outperform here as well last week, and those bank stocks still on the move higher. We're going to look at some of the other financial areas that are faring better than the markets. And again, all about that expected and anticipated interest rate decline at the next FOMC meeting. Here we are with XLB up at the forefront. This is basic materials, Gold stocks were another top performer this week. A lot of that having to do with that reduced interest rate outlook and other factors as well. We will get into that. And moving through, you do, as always, want to be aware of these weaker areas. And you can see these consumer staples, that's XLP, and utilities, those more defensive areas languishing below key support. And then also healthcare did not fare well this week, but here we are with that utility sector that had been faring well due to the increased need for certainly electricity, but the group overall now below the RSI below 50 and approaching that 50-day simple moving average. We can take a quick look at XLV. It got a little bit of a bounce today. This is all about UNH and other managed care companies going higher in the face of Warren Buffett's investment in UNH, but net, the group was flat for the week. So again, those defensive areas languishing relative to the higher growth areas. We'd be remiss to not take a look at technology. XLK, it was flat for the week after being down 1.5% today on Friday. And again, a lot of that due to AI related weakness. So we will get into that. Let's take a look beyond these 11 sectors. And I do have a set of ETFs that I find to be really powerful as far as staying on top of the strength beneath those broader sectors. This is critical. I talk about this a lot, where getting the industry group right is very important when you're on the lookout for those stocks that go on to outperform. 39% of your stock price appreciation or depreciation is going to be determined by that industry group. So let's take a look at KRE. This was up at the forefront last week, and the group was up 1% this week. So a nice continuation. This is the regional banking ETF. So we are seeing continued vibrancy there. And then I talked about gold, GLD, and the group overall was up 2.5%. You can see we have that nice lengthy base breakout, and a number of major Wall Street firms are advising that the price of gold will only go higher going into next year. So those of you that are gold bugs, you will want to take a close look, and I can share with you on stockcharts.com how you can quickly access those leadership names. IWM, this is the Russell 2000, flat for the week, but here we are with that upward trending flag formation. Another area that fares well in a declining interest rate environment. It also does have a pretty heavy weighting of bank stocks within it. Last week, I talked about these solar stocks. This is TAN, the Invesco Solar ETF, and you can see it's still sitting up here quite vibrantly, and that is another area to certainly be aware of. If you did not watch last week's show, I did suggest several names within that industry grouping. Let's take a look at some of these weaker areas. We can see this is the yield on that 10-year, and we are now down to 4.2%. You want to see this in the weaker areas, indicating interest rates declining. So we do still have that momentum from last week relative to areas that generally outperform in a declining rate environment. Now, let's take a look at software, because it is down here in this lower quartile. However, last week it did get a little bit of a bounce, up 0.6%, all about earnings, and a number of these companies are coming out with earnings, but the enterprise software area overall is suffering. This is an area that AI is actually not helping, because AI does allow newer companies to enter the fray because of the ability to create these new software companies a lot quicker. Also, let's take a look at semiconductors. They did get hit today, down almost 3%. This is all about MRVL's earnings. We'll take a look at that stock. And then, of course, Nvidia and other areas. But going into today, we had been sitting up here quite nicely, but you can see this decline. We are finding support right at that 21-day simple moving average. And we do still have, actually, the RSI did dip into negative territory. So keep an eye on that, particularly if you're heavily weighted in those semiconductor stocks. XRT got a little bit weak going into today. Consumer sentiment, there was talk among consumers that there were inflationary fears. So we did see some retailers pulling back as well, but net that RSI and MACD still in positive territory. One other area that fared quite well last week, but it did pull back this week, that is XHB, these home builders. And a lot of last week's advance, of course, had to do with interest rates declining and earnings. So this week we did see a pullback, but finding support at the upward trending 10-day simple moving average. I want to make sure I'm not missing any sub-industry groupings here, and I think we are good to go. So let's go ahead from here, and I will share with you areas outside of the US that are faring well. There's two in particular, and they have very sound reasons for their broader markets to be on the uptick. Here we are with EWZ. This is the iShares Brazil ETF. And this particular area of the markets did get news certainly on Wednesday. They have an election coming up in 2026, and there was a poll that was conducted midweek, and it did show the advantage at this time prior to the election is going toward a pro stock market candidate. So that initially was one of the reasons that we did get a boost in that. And also some of the other reasons are because there is anticipation that there will be interest rate cuts going into next year as inflation is generally leveling off. So from here, let's take a look at a couple of Brazilian stocks that you'll want to be aware of. First up is STNE. Oftentimes when these markets come into play, it will be the financial areas and banks as well. But this is StoneCo, STNE, and years ago, Warren Buffett was an initial investor. I could not tell you if he's still involved in the stock, but you can see this nice base breakout. It is an investment related firm, and you can see that we are also getting pretty decent volume there, positive MACD and a positive RSI. Let's take a look at another stock here that is actually quite a big yielder, and I'll share with you how you can get that information. This is XP. Let's go ahead and scroll down just a little bit, ask for that full quote, and you will see actually this is a investment services company as well. And yesterday we did have a move back above that 50-day simple moving average, which in turn pushed the MACD into positive territory and very high volume. Now it does indicate the yield here. Now I'm not 49%. Other numbers are closer to 14.5%. So you may want to look into that, but those seeking yield and those actually Brazil's market is not going to be as volatile as other areas. And we'll take a look at one other name. This is a large bank stock in Brazil, BBD. And you can see we had an almost base breakout into a base breakout yesterday. And I will note that it is a $3 stock, so it is lower priced, but a number of these ADRs, particularly in Brazil, are lower priced. And then from there, you can see that it does also offer a nice yield. Another area outside of the US that is faring well for its own reasons, and I did highlight this last week. This is MCHI, China's ETF. And of note last week was the fact that the government is going to be taxing income on bonds. So there was quite a bit by way of money flows into their equity market. We did see a pullback. It did end the week back up above that 10-day simple moving average. Let's take a look at a couple of companies that are not ADRs, but they certainly derive most of their business from China, Macau in particular. And here we are with WYNN Resorts, and a lot of Wall Street firms are revising their earnings estimates higher For this particular stock, we can see that we did experience a nice base breakout last week, and then take a look at that continuation rally, MACD black line up through the red, and then we did and are experiencing decent volume on the buying. So there are believers. However, the RSI is overbought. From here, let's go ahead and add a 5-day simple moving average. And this is something, when these stocks get going, can be really quite helpful. This is that blue line, and you can see historically back here in the beginning of July, a pullback to that 5-day can be an ideal buy point. Let's take a look at another stock that is Macau gaming related in China, LVS, and not quite as vibrant, but you can see that we also experienced that base breakout last week into a continuation rally. From here, we can take a look at a couple of other names. One that came out with big news this week is Alibaba, BABA. I'll take a minute to mark this one up, but this is all about the company's announcement that they will be, and are in fact in the throes of, developing their own AI chip. And this is another reason, actually, the news came out today. This is another reason that we did see semiconductor stocks getting hit quite a bit, because competition from China. And we saw that with, I believe it was DeepSeek a few months ago. And here we are with Alibaba, nice base breakout, heavy volume there. And just a couple more names that we can look at in the Chinese stock market. This is SOHU, not quite as vibrant, but we can see that we are on the move, potentially higher. If we can get that nice MACD crossover, that would, of course, be ideal. And then BZUN is another name that is on the move. And again, you can go ahead and ask for that full quote, get better feel for what industry they are in. And it is in the software space. And we had that nice base breakout yesterday and a continuation rally today. So let's take a look at other areas. But before we do that, I do want to make sure you are aware of MRVL. They did come out, semiconductor company, with their earnings today, and the stock fell almost 19%, 18.5%, super high volume on that selling. And it was all about the company lowering their growth outlook going forward. They came in at estimates, in fact, maybe a little above estimates, but it was all about their growth prospects and their guidance going forward that pushed the stock lower. So in turn, we did see other semiconductor stocks getting hit, because it is all about that growth going forward when looking particularly at these growth stocks. Another AI related name that we can take a look at here that came out with earnings today as well. This is DELL, down 9%. The company did come in with numbers that were above estimates, but again, they lowered guidance down going forward. And this again is that formation that I've been speaking of late here. It is called a hemorrhage with a wedge, and it's when you get a significant, fairly significant drop in a stock. Oftentimes you will see that stock wedge for a brief period, maybe 1.5 weeks max, and 80% of the time you will experience another leg down, one of those chart formations that is not spoken of quite a bit, but it is something that I've been seeing more of and worthy of noting. So keep an eye on DELL relative to those earnings. Let's go ahead and take a look at Nvidia. Now, you may be aware that the company did come out with earnings. It was very, very closely watched. And unfortunately, they did see sales to data centers come in lower than expected. Surprisingly, we did see the stock advance just a little bit subsequent to those numbers and then pull back to that 21-day. Now today, you can see that we are very much below that 10 and 21-day simple moving average. We have a now negative RSI with that MACD heading lower as well. So from here, if you are a holder of NVIDIA, perhaps a large portion potentially given its sharp advance, you will want to go ahead and drill down, take a look at, depending on, are you looking to perhaps take profits or not, but an intraday chart can be really quite powerful on a daily basis as far as providing you insight into overall sentiment. So here we are today, we had that gap down and then a continuation below these 5 and 13 simple moving average. The RSI did not get back into positive territory. From here, you can go ahead and drill out to an hourly chart, and you'll see that same phenom where we had that decline and then just a back and fill, no real buyers coming in on that dip. So what you want to do, again, if you're on a given day looking to potentially sell, ideally, of course, you want it to be moving higher. This is that hourly chart taking us back to last week. We did move back above that 5 and 13 hour simple moving average. We did get a constructive RSI and MACD, so it giving you that ability to potentially sell on any rallies. From here on Nvidia, we'll take a quick look at that weekly chart, and you'll see that we are sitting up here. This is a 10-week simple moving average, also known as a 50-day. And if we drill out to that weekly chart, it does certainly eliminate a lot of that volatility, and we are sitting up here rather nicely. However, we do have that RSI trending downward. It is something of note that if we get a negative RSI on the weekly, it is definitely worth sitting up and paying attention to. Now, from here, I did want to go ahead and share with you, we talked about energy. Not sure if we took a look at the oil. It's not a sharp advance, but net, it was up a little less than 0.5%. But we did talk about that energy group. Of course, this is a weekly chart. We can take a look at the daily. It's going to look quite a bit more vibrant. And from here, I will share with you a couple of names that are definitely perking up. These are the better known E and P names. Here we are with Apache. I'm going to go ahead and ask for that full quote for those that are interested, because you can get a nice sense of potential yields here. But let's go ahead and take a minute to what I want to do is share with you the fact that we are in the throes of a very lengthy base breakout that is taking us back to the beginning of the year. So this is about an 8-month base breakout. Ideally, you want more volume. We are looking at a daily price chart, and we are seeing certainly a little bit above average, but certain also of note is that we are coming out of a nice lengthy base. Another name that we can take a look at, and these are former leadership names, certainly names I'm very aware of because, oh my goodness, OXY, Occidental, another E and P name. And it is coming out of a shorter base, but we can also see that it does have a positive RSI and a positive MACD. Last up, we'll take a look at FANG. This is Diamondback Energy, and we are still early in its potential advance in the sense that it is finding resistance at this downward trending 200-day simple moving average. As always, if you are looking for those leadership names, you want the names that are first out of the gate. Oftentimes they will continue to lead if the rotation into that given group has legs. Last up, I talked about gold stocks and ways that you could use Stockcharts.com on any industry group to get in front of those leading names. So we are looking at intraday performances. You can see those gold miners and mining in general. Silver was up again this week as well, but we're going to pull up a 1-week chart here, and relative specifically to gold, what you can do is then go ahead into that sub industry grouping. Your initial sort, I'm asking for a 1-week view. From here, what I would like to do is sort it by that Stockcharts technical rating. And from here, the higher the rating, the more technically sound that particular stock is. And you can see we do have a fair number of these names sitting up here at the forefront with nice high scooter ratings. You can also, for my work, I tend to sort it by market cap. I want to be in front of those bigger companies that are going to have more by way of money flows. So we can take a quick look. Newmont, certainly a well-known gold stock, which has been in a nice uptrend. From here, we can take a look at that weekly chart and note too that it has been trending higher. So if you are on the lookout for a highly rated stock, but that is not up and out, you can go ahead down into a lower scooter rating and take a look here at Barrick Mining, which of course is also in a very confirmed uptrend. But we are in a period of consolidation as the stock is now in an overbought position with that RSI sitting up there, and you can see sideways price action on the MACD, and that's what you want to see to allow the stock to potentially set up for another leg up. And that is it for this week. Everyone have a fantastic long weekend. And for those of you that haven't already, go ahead and hit that like button if you like what you've seen. As always, you want to be alerted to upcoming shows, so go ahead and hit that subscribe. And there is a link to trial my twice weekly MEM Edge report at a nominal fee. I'm going to look for you here again next Friday.